All right. We are live. Welcome everybody to our first webinar. We are the Proseer team. We're here to go over some best practices. Welcome to rewriting the rules, accelerate your growth with optimized accounting. Today, we are really excited to teach you how to not settle for manual, outdated accounting process, which limit your growth. We're super excited to be here. This is our first webinar. So appreciate the patience as we work through some things. I am Jeff Rudner. I'm the co-founder and COO of Proseer. My background is in finance and data analysis. I work with our clients in helping them understand the financials and set strategy to achieve their goals. I'm joined here with my partner, Larry Bernstein. Larry, introduce yourself.
Good afternoon. My name is Larry Bernstein. I'm a certified public accountant, and I have a passion for the intersection of accounting and technology. And also, in addition to helping us with our outsourced accounting practice, I'm an expert in tax advisory and tax compliance, and looking forward to sharing some of my favorite topics with you today.
Awesome. So at Proseer, we focus on bringing a holistic approach to our clients, which are small and medium-sized businesses, where we become the accounting, finance, and tax departments for their businesses and everything through to their personal lives. We support them through bookkeeping, accounting, financial analysis, strategic planning, and tax compliance. And today we're talking about ways to streamline a lot of the processes and make it so an entrepreneur's life is easier than the traditional manual systems. So on today's agenda, we're going to talk about the optimal mix of people, process, and technology, and how we at Proseer tailor that mix to our clients to alleviate a lot of stress and bring them joy and happiness to allow them to focus on what matters. Anything else to add there, Larry?
I think that's great. We got a lot of good stuff for today.
Cool. All right. So let's get into it. So Larry, people, process, and technology. What does it mean? Why is it important?
Yeah. So whenever you're thinking about how you're going to run your accounting and finance function in your business, these are the three pillars that we think are probably most important, right? Any one of them on their own is not going to do it. Even two of them are going to get you quite a bit of the way there, but maybe not as far as we like to see it. So and we'll talk about this a little bit more in detail as we continue, but the idea is that do we have the right people in the right seats, right? The right roles, the right responsibilities? Do they know what they should be doing? And are those processes optimized to give you the best results and have those results happen continuously and in a systematized way? And lastly is the technology that can help us do this. And that technology component is, one of my favorite things, but without the process and the people, again, it's not going to do it for you. But the technology can allow these things to scale, or they can allow it so that you can get your weekends back, or they can allow it so that you can really do things that matter to your business rather than manual and Pittsburgh. So we believe that, like it says at the bottom of the slide here, combining the best of the people, process, and technology can really supercharge your company's performance. And that's more true today than it's really ever been in the past.
Awesome. And it's really with the optimal combination of all three that you get the best bang for your buck. You can have firms that have super people with okay technology and not great processes, or you can have amazing technology with not the right people and amazing processes. And all these situations where you might be missing one of the three can really put a damper on the business. And so, as Larry mentioned, it's really having the optimal mix of all three to help your business. So getting into people first, Larry, the slide says the right people at the right place at the right time. What does it mean? Who do we have on the slide?
Yep. So what you see here is maybe what you would see in a larger or more mature business, where you have a chief financial officer or CFO at the top, maybe a chief accounting officer or controller, some sort of senior level accounting function in the middle, perhaps a finance wing out to the right side, tax advisory and consulting out to the left. However, tax in almost every company is outsourced to a public accounting firm because tax is such a specialty. And then below the accounting function here, you might have an accounting manager or accounting supervisor, and then accounting clerks, which can do both GL accounting as the preparer space, and then perhaps an accounts payable, which is like your bill pay, and accounts receivable, which is your customer invoicing clerks. And so in a big business, you may have the budget and the need to have individual people in each one of these roles or seats, or perhaps even larger teams represented by each one of these rectangles. But the reality is, in a lot of the clients that we work with, they don't have the budget or the need for people at every one of these spots, right? Ideally, they may need a fraction of a person at each of these spots, and only maybe at certain times of the year or certain times of the month. On the other hand, maybe they have budget for one or two people, and then they have a tough decision to make of which seats should we try to fill, right? And that's an interesting thing to think about as you try to design the ideal people situation for your business. Should I build it all internally? Should I outsource the whole thing? Should I have some combination or hybrid of the two? And so that's one of the things that we really think about as we think about people in the back office, finance and accounting.
That's right. And a lot of what we see with small and medium-sized businesses is they have people that do a lot of disparate things that are semi-related, but aren't perfect specialties. So you might have an office manager that's also a bookkeeper that also sends invoices, or you have a sales manager that is responsible for some of the aspects of financial planning or some of the bookkeeping. And the risk here is by not having the right people with the right experience doing those tasks, you risk having issues with your accounting. You see it time and time again, things not done right because you don't have that specialty. So you want to have the optimal mix of the right people in the right place at the right time. We bring that to our clients through the outsourcing model, which we believe can support our clients, help them grow. But if you operate in the outsourcing model, bring that in-house, making sure that the team that you're building is specialized to achieve your goals and get you the information you need to grow your business. So thanks,
and one
Larry.
more thing to add here about people is if you have one person that has control over multiple functions, you can have potentially an internal control risk where someone may have too much control over your business and can potentially cause some problems. So that's another good reason to think about having the right people in the right seats.
Awesome. All right. So with people down, we're going to move on to our next pillar, which is processes. And before we get into the details of this slide, just wanted to share a quick fact that according to Smartsheet, over 40% of workers surveyed spend at least a quarter of their work week on manual repetitive tasks, a quarter of their work week. Email, data collection, and data entry occupying the most time. It's a quarter of their work week for those tasks. Additionally, nearly 60% of workers say they estimate they could save 6 or more hours a week, almost a full work day, if repetitive aspects of their job were automated. So I think that is just an amazing data point to think that 6 hours a week is being spent on things that can and probably should be automated and built with and replaced with streamlined processes. We'll get into some of the automation and technology later, but want to get into process and ways that businesses can streamline things to limit redundancies and improve the way that they do things, do work. So for us at Proseer, we believe that it's important to utilize the accounting system, whether that's QuickBooks Online or Sage Intacct, the general ledger that you're using as the central hub for all things finance. That way, everything is come to one place and everyone's looking at one source of truth. Now, by utilizing these tools and integrating as much as possible into them, you're able to get really rich data and can make it so that people are entering data once and it's done and it's right the first time. And so we believe that utilizing the general ledger as the hub will allow you to connect bank feeds and accounting data directly into the ledger. So that way it's entered one time. We also recommend integrating a bill pay solution directly into the accounting system. So that way bills, when they're received, are immediately entered into the accounting records as payables. Also, if you have employees that are spending money on behalf of the company, there's options to create an employee expense program, which detail with data flowing directly into the accounting system. So it's entered once and you're not chasing people down. And then also we recommend incorporating the payroll data directly in the accounting system. So that way, as all information is entered into the accounting system, it's immediately available to people that are utilizing the financials to interpret it, analyze, and make decisions. So utilizing the GL as the hub is a big component of our recommendation for financial processes and process improvement. Anything to add there, Larry?
No, I think we'll talk quite a bit more about process and process mapping before we get to technology in a few slides.
Cool. Awesome. And so by improving your processes, you'll be able to limit the types and amounts of surprises that come from your financial department. So, when we talk about the holistic solution, we're talking about accounting and how it flows into tax. And so one stat here is according to the NFIB, their 2021 tax survey, it said 77% of small business owners reported that federal business income taxes were very or moderately burdensome. And this led to reduced profitability, restricted growth, and owner stress. And so by going back to the previous slide, by utilizing the accounting system as a source of truth, by plugging in as much data as possible into the accounting system, you're getting real-time information. So that way you can make data-driven decisions and you can share that information with your team. And so a couple recommendations on the process front is to have the accounting system be real time and live, and have data entered in there on a regular basis, whether that's you have an accounting clerk, you have a bookkeeper, or you have an outsourced accountant keeping up your books on a regular basis. We recommend at least monthly, if not weekly closes. So that way you can get the data you need to make those decisions. Also, holding your team accountable to getting things in timely. They have bills that they've received from vendors, not holding on to those for one reason or another, making sure that gets to the accounting team as soon as possible. Additionally, if you have a budget with the new accounting systems that we're talking about, the cloud-based accounting systems we're talking about, you're able to upload those budgets directly into the accounting system. So that way you can compare progress against that budget and make those decisions super quick. So here's a couple examples of why that's important. If you have your budget uploaded into the accounting system, you can compare your progress against that budget. So if sales are up versus budget, well, you can analyze the performance and determine whether you want to reinvest that additional income into marketing to continue to grow sales, or do you want to take distributions if it's one-time sales that aren't going to be recurring and you want to take that money out of the business? Do you want to bonus your people for outsized performance? On the other hand, if you're underperforming your budget, then you might want to cut back and you want to see where you should cut back. Do you want to cut back on sales and marketing? Are there software and subscriptions that you're incurring expenses on that you might not need and might not want if you're underperforming your budget? So by loading your budget into the accounting system and having real-time data, you're able to make those quick determinations to make the decisions and save money. Additionally, by having real-time data, you can share that information with your tax team. So that way they can give you analysis and projections. So that way you limit surprises on the back end. Larry, we started the firm with the pillar of limiting surprises for our team, for our clients. What are some situations you've seen that's typical of tax preparers not having access to data? What are some risks and the experience for some clients that don't have the integration that we do?
So, earlier in my career, I worked as all the way from a tax preparer, an associate through tax director, and it was a great experience. But one of the things that happened there is you had very limited access to the company financials. And when that happens, it's very difficult to have proactive advisory. What's happening in the business? What does income look like? And so you can request the financials from the client, and maybe they'll be able to send them to you. Or maybe those financials are pretty far behind. They may be a few months behind, or in some small business cases, maybe they may be a full year behind. So when there's not accurate and timely source data, it's very difficult, if not impossible, to do really great tax advisory.
That's right. And so by utilizing the accounting system and keeping it up to date, you're able to work closely with your tax advisor to give them real-time information. So that way they can advise you and make recommendations on estimated payments or investing in fixed assets or capital assets. They can give you the information based on real-time data. So that's the pillar of everything that we're talking about here. And the last topic is, or the last point is to reevaluate and review and reevaluate. And so this isn't a set it and forget it recipe. You can't just build it once and not adapt based on changes in your business. So by working with the right team and building out the right systems and processes that are flexible to be able to grow and scale, you have a winning mix. So on the next on the process side, we're going to get to a little bit more detail. And Larry, take us through what these terms mean.
Yep. So whenever you're thinking about what are we doing today in our accounting and finance function, and then ideally, what would we be doing if we were doing everything in the way we'd love to do it? It's easy to want to jump to, well, what's the next technology tool that I can implement? And I myself have had that problem over and over again, right? It's very exciting sometimes to want to try some new tool. But the reality is what's really important is to do a process mapping exercise. And so what you see on the screen are examples of key accounting department processes that could be mapped out and potentially improved with new software. And so these processes, I'll just kind of go through them briefly and tell you what they're about. If any of you want to know some more details behind any of these, feel free to reach out to us and we'll share them with you. But you got procure to pay. This is buying things. Everything from a purchase requisition through a purchase order, through a vendor invoice, through paying for it, right? How does that whole process work and who needs to approve along the way? The next one is order to cash. This is about your customers, from a sales order to a customer invoice to collecting on the cash. How does that work? Where are the salespeople involved? Where is the accounting team involved? How does it work today? And again, ideally, how would it work in the future? The next one is, this is about your accounting department, your back office accounting team. And it's really about your month-end close. It's called record to report. And this is about getting all of those transactions to flow into the accounting system, ideally in real time. So or within a few days. Real time in accounting could usually mean within a few days, to make sure that all the transactions are flowing in. So there's not a tremendous amount of work to do at month end, but also so that you can rely on those financials intra-month, right? And what other kinds of things need to happen at month end so that we can close the books and then lock those periods. Next, we got an HR function, hire to retire, everything from onboarding a new employee through payroll and benefits through retirement of that employee. How does it work? And ideally, how we'd like it to work, including how do those entries hit the accounting system and show up on financial reporting. The next one is similar to the one above. As you can see, they both have retire at the end. Acquire to retire is the same thing as people, but this time it's for fixed assets. And your fixed assets are things like building, equipment, things that have a long, useful life. So how does that work? From when you buy an asset to when you place it in service through depreciation and so on until you dispose of it. Last two here, we have cash management. What kind of bank accounts do we have? What are we doing for treasury management? What are we doing for credit card or charge card spend? How does that whole process work? Who has rights, signature authority, et cetera, on our cash accounts? And then the last one is probably one of the most interesting ones, which is now your business specific processes. So every business is different. Almost everyone will have the ones that we saw above, but every business has their own unique type of thing that they do, right? And so you want to make sure you process map out your core business specific processes so that you can have them done over and over again in a repeatable way. Jeff, I have some background noise from you.
Nope, sorry.
So they can be done over and over again in a repeatable way. And so that, the team knows exactly what they need to do and when they need to do it.
Awesome. So, Larry, of these topics here, of these different steps in the processes, do you have a favorite? Or which one is your what's the most important to get right? 2 questions for you.
I think that there's not necessarily a favorite. And Jeff, I still have background noise coming. I can hear myself coming through on your screen. But there's not necessarily a favorite, but I think there are a few here where you have like a significant return on investment or ROI if you have some good process improvement and maybe add some technology. So whether you look at your procure to pay process, that one can have significant impact and improvements in your systems because if you're writing paper checks, let's say, or you have a no approval process or a manual approval process, tremendous benefits to improving that. And you don't need to change your whole system to do it. I think when you look at card spend, which could be in your cash management side, that can also make a big difference. And also in your month-end close, a lot of folks don't do a great month-end close. And there's significant ways to improve there because that'll give you the confidence that your financials are right and they can be relied upon for business decisions, which is really, at the end of the day, the reason you do all this.
Yep. Agreed. My personal favorite is order to cash because it means we're getting paid. It's how we get paid. It's how we send invoices, interact with our customers, and collect cash. But in terms of which one's the most important to get right, for me, it is record to report. You have to make sure that the general ledger is kept up so we can make data-based decisions. And that brings us to our next slide. So our next slide has some interesting data points here. Making sure you have timely and accurate data is just, can't stress it enough. Nearly 70% of leaders said they'd made significant business decisions based on inaccurate financials. So many entrepreneurs just take the financials for granted. They don't look at them and analyze them. They don't try to understand what the different line items are. Just 38% of financial professionals said they trusted the numbers. It's just staggering. Just a little bit over a third of finance professionals don't trust the numbers they're utilizing, whether that's because they don't have the confidence in the team that's performing them, preparing the numbers, or some other reasons. Another staggering point here is that poor data quality can negatively impact the timeliness of your data consumption and decision making. So, and then lastly, in fact, poor data quality may cost the US economy as much as $3 trillion in GDP. So it's just crazy to think that entrepreneurs aren't using their financials to make decisions. We work closely with our clients to make sure they're comfortable and they understand their data. And, so many clients come to us uncomfortable with their balance sheet, their income statement, uncomfortable with how they're performing. Larry, you have we've talked about a story about a client that came to us just, a little bit in shambles with their financials. They had a bookkeeper. And can you tell that story about that situation and what you think's behind it?
Yeah, it's interesting. A lot of folks will try to do the books themselves. Others will try to use a less expensive solution, which will work sometimes, but sometimes not. And this is an example of where the sometimes not happened, unfortunately. So in this case, the accounting was done monthly. The bank accounts were reconciled monthly, but the owner knew something just wasn't right. They couldn't figure out what wasn't right, but they just knew it wasn't right. Couple things that they were doing that in hindsight now have opened their eyes. One, they were only looking at the income statement or the profit and loss statement for their analysis. This is common, not just for this client, but for many. It's critically important that you also look at the balance sheet and understand what's on there. Then within the balance sheet, you want to look at your accounts receivable balance and your accounts payable balance. Who owes you money and who do you owe money to, along with the aging. And so what can happen all too often is when we use bank feeds, which is, electronically connecting your bank account to the accounting system, all those bank transactions come in automatically. And what that means is now you're ready to just post them. But the challenge can be is if you have, let's say, money out that comes through the bank feed, but that was actually paying for a bill that was already entered in accounts payable, you need to match those two together. And in this case, they weren't. Those payables look like they were never paid. And the expense, because it was posted off the bank feed, plus when the bill came in, was recorded twice. Relatively common problem. And it's usually one that a lot of bookkeepers will miss. So that's kind of, I think, a good example of the difference between bookkeeping and accounting. And I think the really interesting part about this is the owner knew something was wrong. They're a smart person, but the thing that was a challenge for them was they were embarrassed to talk about it, which was an emotion that I hadn't really considered, but I guess it might be more common than we expect. And the reality is that we're here to help. Okay. Accounting is not simple. A lot of people think it is simple. They think bookkeeping is simple, but it's even more difficult than what you learn in school. Learning in school just isn't enough either, right? So it comes with experience. So don't be embarrassed. We're here for help.
Yep. Yeah. Don't try to go all alone. It's something that having the right advisors on your side, having the right team on your side can just alleviate a lot of stress and give you the information you need to run your business. So thanks, Larry. This slide is just a summary of what we've been talking about previously. Streamline your processes. A couple of ideas. A way to do that is to create standardized bill templates or invoice templates. So that way, for things that you're repeating over and over again, you have that set up so that way you can get those out of the system as quickly as possible to get you paid or to process bills. Additionally, for financial reporting, build the customized reporting within the accounting system. So that way you can have it ready as soon as the financials are done at month end to distribute to your team, and then regularly share those reports with your stakeholders, whether those are investors, whether those are key members of the management. So that way they can help you analyze the business and make decisions that will help you achieve your goals. So improving those processes is something that's often overlooked. People just throw technology at it without the ideal process built. But building the process is an important step. So with that, we'll get to the exciting, shiny things with technology. So Larry, take it away.
I think we can skip this slide. We're going to get into each one of these here in a bit. Let's go on to the next one.
Okay. Sounds good.
All right. So when you're talking about technology, there are two really large categories of things that I think can make a large difference in the trajectory of the back office accounting. And the first one is going to be ERP, or general ledger. ERP stands for enterprise resource planning, but in most small and medium businesses, this is just your accounting system, your general ledger software. And then we'll talk about spend management here in a minute. But so for ERP, here you have a matrix, right? And across the top row is cloud-based accounting systems, and the bottom row are the legacy on-premises or desktop systems. And I'm not here to tell you that any one of them is horrible. Okay. These are all good accounting systems. But as we talk about best practices today, if you're going to implement something new today, what should you potentially do? I think it's going to be cloud, which is on top, right? So we like QuickBooks Online for smaller businesses, or it could even be a large business just with less sophisticated needs, right? Xero is very similar. But one of the key parts of this is that those systems are both for single entity businesses. And we can compare and contrast that to a multi-entity business. So what's a multi-entity business? Let's say that you have company one, company two, company three, et cetera, and they're all somewhat related. Maybe you have a management company and you have a company that owns rental real estate, or a management company and 30 companies that own rental real estate. Or if you have maybe different hotels that all share common ownership, something like this. A multi-entity system can provide tremendous benefit. In addition, whether you're multi-entity or not, when you go to these mid-market systems, which you see on the top right quadrant, what happens is there's a tremendous amount of additional features and customizability and security. And so the one that we like here is Sage Intacct, but it's also very similar to Oracle NetSuite, Yardi in the real estate space, and even Microsoft Dynamics Business Central. And so those are your cloud systems. The older systems that a lot of people still have in place are QuickBooks Desktop in the bottom left corner, and maybe even Sage 300 on the bottom right side, which used to be called Timberline. And so if you're on one of these on-prem systems and you're looking for ways to improve or find efficiencies, moving to cloud software might be able to do that for you. But remember, process first.
Awesome.
All right, so let's talk about within ERP, what is common practice? Okay, what do we see a lot of happening? And then maybe best practices, what I'd recommend that you do today. So within common practice, especially if you're in an older system, or maybe a system that wasn't implemented as best as it could have been, to do a lot of things other than just generate your standard financial statements, you got to export to Excel. Export to Excel, manipulate to analyze, right? And when you export to Excel, what happens? You open up for human error. So that's one of the main challenges there. Another challenge is that when you export to Excel and you share it with your team members, as soon as you export it, it's out of date, right? New transactions are being posted. It's no longer the current data. The longer the time period goes from that export to today, the less helpful that data can be. Stakeholders may want to use that data to be able to make decisions. But again, if they can't get to it themselves, they need to email the accounting department or ask the accounting department for help. Again, it may not be timely enough, or it may just be too much work. And in some cases, we've even seen other stakeholders or other management groups make almost a parallel accounting system so that they can track what's going on because it's too difficult to get the information from accounting, which might sound ridiculous, but we've seen it happen. And again, I think we just already hit on manual processes, but manual processes, the more you have, the higher you have risk for inaccurate data, but also a slower month-end close process. And the faster you can have it closed, the more reliable your books are, the better. When we think about best practice, ideally, we want to have single source of truth, and we want to rely on that single source of truth for a lot of our business operations, right? So it doesn't have to be limited to just generating our income statement and our balance sheets and our standard financials. We can use these ERPs to collect other information. So like, for example, let's say on every vendor that we set up, we want to collect information about that vendor. Maybe we want to know a certificate of insurance date, a workers' comp insurance date. We can enforce it and make sure our team collects those insurance certificates and attaches them to the vendor record, right? And by doing that, we've created a system that makes sure that always happens. When you don't have a system that can do this, and let's say you're doing your best, what are you going to do? Maybe you're going to create a Google Sheet or an Excel document to track these dates, right? And that can be problematic. Another thing to do in best practice, like we talked about before also, is integrate third-party solutions, whether that's a bill pay system or a payroll system or any of the other systems integrated. So you only need to enter the data once. What does that do? Of course, it reduces errors, it increases speed, but it also really increases the happiness of your accounting team because they only need to enter the data once. What else we got here? We can leverage dashboards. So traditionally, accounting departments and the accounting teams were really the only ones who had access to the financial data. But as we move into cloud-based accounting systems, especially the ones that go up market a bit, but even QuickBooks Online has this to a certain extent, you can invite more people in your organization into the accounting system so they can have access to the data as it sits today and tomorrow and at any point in time, so they can use that data to make decisions and potentially, if they have the right security permissions, drill all the way down to the source documents and see what happened. right? We already talked a little bit about enforcing business rules of streamline process with regard to collecting dates for a certificate of insurance and those types of things. But we could also do it to make sure that we enforce workflow. So maybe something can't advance from a PO to a vendor invoice without specific approvals. So those are some of the best practices there on ERP or just your general ledger.
Awesome. Yeah. And, because just as we started the presentation on the three pillars of the best in class systems is it takes a little bit of people, process, and technology. The technology can be utilized to improve your processes. It can be a tactic to standardize, systematize, and make repeatable your processes that are going to be executed by people. So technology is a great tool, and we're going to get into some specific examples here, starting with spend management.
The spend management is not really something that's new, but parts of it are. And the parts of it are really exciting. And I know that that's kind of funny, but there are some things here that are really, really great. So what is spend management at its heart? It's about pre-approving spend before it happens, right? In traditional accounts payable or employee expense reimbursements, these approval requests are generally happening after the spend has occurred. So purchase orders have been around for a long time, which is about the idea of setting approvals before spend happens. But in my experience, most small, medium businesses don't use purchase orders, right? Or they don't have the appropriate approval flows on purchase orders or purchase requisitions. So here is a way where spend management becomes a lot more accessible without needing to do some of these legacy type of things. So let's go ahead and get into some of my favorite parts about spend management on the next slide. So I'd like to introduce a concept that's called virtual cards. A virtual card is like a Visa card. Okay, it is a Visa card in this case. And that is a fake credit card number on the screen. So if you do try to use it, it will not work for you. So do not worry about that. But what you would use a virtual card for is it's very similar to the way you would give employees access to a physical card, but it gives a lot more granularity and control. So let's think about the traditional example where you give cards out to employees in your office. Go back a slide, please. Okay. So let's think about a traditional example where you give cards to your employees. One of the most common ways to do that would be to say, hey, I'm going to give, in this case, this user's name is Mary Brown. I'm going to give Mary a card on Amex or Chase or wherever it might be for $5,000 a month. She can use that card for up to $5,000 a month anywhere she pleases, as long as it's in line with the spend policy document that the company is most likely put out. Okay. But here, what we would recommend instead is give Mary maybe a $500 allowance on a physical card or some small amount, right? Because most of her spend happens online. Let's say that Mary is the director of marketing at this company. So what she does is she says, hey, boss, we're going to start a Google Ads campaign, and I'd like up to $2,000 a month to spend on Google Ads. She puts in a spend request, which is like a purchase order, but it's not. And she gets a virtual card back once it's approved. That card will only be used for Google Ads, right? We can restrict it. So that card, we don't have to, but that card might only be used for Google and for Google Ads specifically. And if at any point in the future, Mary is no longer with the company, we can reassign that card to somebody else. If at any point in the future, Google tries to charge $3,000, the charge will just decline. There are so many great routings for this. And the part that we like on the accounting side is that we can automatically categorize the spend that happens on this unique card number directly to a GL account for advertising. So what does that do? It speeds up data entry on card spend into the accounting system, reduces errors, and generally makes everybody a lot happier. We could also, if we wanted to, even exclude spend on this card from receipt requirements and memo requirements, whereas we may require those types of things on just general spend. So that's what virtual cards are in a nutshell. Next slide.
So at a high level, it gives you a lot of control without the need of creating a physical card and giving it to someone, right, Larry?
Tons of control. Tons of control. Yeah. And you can just turn it off whenever you want.
Awesome.
One of my other favorite things about it is subscriptions.
Mm-hmm.
Sometimes subscriptions can be very difficult to cancel. Newspaper subscriptions are notorious for this. If you want to cancel a newspaper subscription, you got to call. They won't let you do it online sometimes. So if you use a virtual card to sign up for your newspaper subscription and they want you to cancel, but they want to make you jump through hoops to cancel, don't worry. Just turn off that virtual card and they can no longer charge you. And you spun it around. Instead of you needing to spend a lot of time to try to reach out to them to cancel, now they're trying to call you to get a new card number, which is the way it should be since you're the customer.
Awesome.
Okay, a couple of things here. Most virtual cards are going to be used online or over the phone instead of in person. However, some of the providers have now made it so you can still use it in person if you need to. Another thing about virtual cards is security. Let's say that newspaper company's database was breached and all the credit card numbers got out, and you use that same credit card number and 20 different vendors. What systems? You don't need to go to those 20 companies and update your card information simply because the only one that got compromised was this one virtual card. So you don't need to worry about it. You can just turn that one off and issue a new one.
That's a great one.
Save yourself time. And I think we've already talked about the last two benefits there. So big fan of virtual cards.
Also, yeah. And additionally, depending on the provider you're utilizing, gives you visibility into all the cards at any point. So if you periodically look at a list of all the virtual cards you created, you might question some of them and turn them off, save yourself some money, as opposed to having to call the vendors Larry mentioned, or by having everything on one card, which makes it a lot more difficult to review.
I guess one more point there, we didn't even think about it, but in some small and medium businesses, credit card numbers are shared amongst multiple people.
Mm-hmm.
That's a huge no-no. I definitely don't think you should do that. And a bare minimum, you should have separate cards for separate people, even if you just issue physical cards, so you have accountability on that spend. And then this, what we talked about, is even one step much further than that for accountability. But I mean, if you have like the owner's card and that number is shared with a bunch of trusted employees so they can go buy whatever they need, it's very difficult to figure out who subscribed to this or who charges this. What is it? Yeah. Okay. Next thing on spend management is accounts payable. And in accounts payable automation, a lot of potential for improvement, especially if you're writing paper checks. We love Bill.com for this one. And when we initially started supporting Bill.com, at least when I did, I don't know, it's got to be more than 10 years ago. One of the things that we would say is you'll never write a check again. And that's for the most part true, right? No longer do you need to have check writing or check signing days or check run days every Friday or whatever it might be in your office. Instead, now you can have a distributed team, and you yourself as the owner or the check signer can also be anywhere you want to be. And you can issue payments and approvals via ACH, virtual card, or even have Bill.com send a check out on your behalf. If the vendors are getting paid ACH, which is an e-payment, they manage their own bank account information, their own vendor record. And again, this will automatically sync with the GL and has great approval workflows. It's also a good way for you to make sure you collect IRS W-9 information. That's the tax IDs that you'll need to issue 1099s at the end of the year. Cool. Okay, moving on to the third pillar and final pillar of spend management is employee expense reimbursements. And so with employee expense reimbursements, again, tremendous ROI if you have people that are spending money and need to be reimbursed and you don't have a great process for this. You'll want people to submit receipts electronically in an easy way, be able to automatically enforce policy. Like, let's say they can only buy a coach seat on an airplane, or only up to so much money on a meal, or so many cents per mile for driving, whatever it might be. Having a system to do this, as opposed to perhaps filling out an Excel sheet and scanning receipts and sending them in can just save a tremendous amount of time, improve employee satisfaction, and also get them paid back faster, right? And at the same time, make it so that you don't reimburse for things that you're not supposed to reimburse for. And so often these systems, that second to last bullet says repay employees via ACH. This would be directly from the expense management system and allow you to skip going through payroll or an HR team to issue that reimbursement, right? And get it coded back to the accounting system in the right spot. Okay. So who are the spend management platforms? These are the different technology providers. Not a comprehensive list, but we got Ramp listed over on the left. And Ramp is one that we like a lot, right? It's the one that you saw the charge card screenshots for. And believe it or not, Ramp is a free product today. And they have a plus version that's recently rolled out. I think it's about $12 a user per month. But if you do like some of the advanced features of Ramp, I still think that's a very good deal. It also has bill pay and employee expense reimbursements. You heard me earlier talk about Bill over on the right side as my favorite for bill pay, and it still is for a variety of reasons. But they're now combining together a recent acquisition of Divvy, which was a card platform similar to Ramp called Bill Spend at Expense now. And those two products, the accounts payable version and the card spend, should be coming together over the next few months to a year. So we're kind of waiting and seeing on how that kind of evolves. And right in the middle, you have Airbase, which is also a fantastic product, but it's a little bit more expensive. It's upmarket a bit. Some of the other ones we didn't talk about are Brex, Expensify, SAP Concur. Again, not a complete list. All those don't necessarily handle every one of these pieces, but worth checking out after you go through your process mapping exercise.
Thanks, Larry. And the important thing for all of these that's I don't think we hammered home is auditable and trackable histories for workflows. So with Bill.com, approval workflows that have robust audit histories. So that way you can look at who created bills, who approved bills, and who released bills. If you have any questions to maintain those internal controls and give you the details on what happened if you have any questions.
Absolutely. Yep. And that's going to be a hallmark of all of these cloud systems. And I would assume most of the desktop systems as well, but you're going to always have auditable audit history on almost every transaction. Who did what when, right? But you can also enforce making sure that they go through those processes, which I think is even more important than the audit history, but both important.
Yep.
All right. So spend management, why, right? So we want to make sure that we give companies and owners the ability to decide, should we spend this money or not before that spending has occurred, right? We want to give the end users, the department heads, everybody visibility into their spend so they can understand where they're at versus where they said they were going to be. It'll help the accounting team by getting these transactions into the GL quickly and consistently, which then leads to faster close, which means that we can issue financials to stakeholders, investors, banks, whomever it might be, faster, right? If you're closing the books more than 20 days after the end of the month, you have an opportunity to improve. If you're doing it in 3 or 4 days, you're doing fantastic, right?
Okay.
Anywhere in the middle, you got room.
Cool.
All right. On approvals, we just kind of talked about that briefly, but, in many businesses, there's no approvals, right? Or you're sending emails around for approvals, or perhaps even more old school, you're walking paper around for approvals. When you move to some of these newer systems, you can have in-app digital approvals, right? And that in-app approval may be on your phone, which is kind of great, right? Or it might be on a website. Either way, digital approvals are great. And the next part about digital approvals is you get aging. So you can see, hey, look, Johnny's got stuff that hasn't been approved for 10 days. Everybody else is like kind of moving stuff through quickly. So you can go and see, well, what's going on with Johnny? Maybe there's a problem with his projects and they shouldn't be approved, or he's waiting to decide they should be approved because you can reject them, right? Or maybe the reality is that he's just not doing his job. Either way, you can see what's aging and know, what it needs to be without needing to do constant follow-ups to find out what's up. People take vacation, maybe not as much as they should here in the United States, but people do take vacation. And at the same time, you may want to have it so that work doesn't stop while they're gone, or so that they don't need to approve things when they're on vacation. There's a concept of vacation delegates. So while you're out, you can potentially have someone else stand in your shoes to approve things if you choose. And then again, we're talking about enforcing business rules, which we've hit on a bunch. But the last one I think is kind of neat. Some of the systems have something called conditional logic available. So perhaps for everything for a specific location, it goes through certain approval flows. But if certain conditions exist, like let's say it's a bill for legal fees, you may not need that location manager to approve the legal fees for that location. Instead, perhaps just the finance team or just the in-house legal department needs to approve legal fees across the board.
Awesome. And this really is summed up by, these are processes that are optimally designed and codified through technology so they're repeatable and enforceable. So Larry, we got just over 5 minutes here. So this is the last slide here for technology.
All right. I don't know. With 5 minutes, we probably don't have time for this example today.
Okay. All right. Well, if anyone has questions on the usability and real world examples on how we put this all together, you can reach out to us through LinkedIn or through the website. We have a link at the end on how to reach out to us. So to sum up everything for what we talked about today, we're really here to support our clients and to help entrepreneurs take their businesses to the next level. We work with all of our clients to bring that optimal and tailored mix of people, process, and technology to give our clients the information they need to build the right processes. So that way they're not working weekends, and get them the information that they need, or they're not working weekends on accounting, at least and get the information they need to make data-driven decisions to achieve their goals, whether that's grow the business, whether that's make more money, whether that's to delegate access to team members, whatever it is, we support them through that combination of people, process, and technology. And sometimes it's more technology than people. Sometimes it's more process, or sometimes it is just more people. So we sit with all our clients to design the right mix and help them succeed. And we do this with the intention of helping them scale. So conquer the scaling challenge. So many clients build processes for what they need need right now, without thinking about what they might need in 3, 6, 9, 12 months or multiple years. And so by utilizing the right combination of those 3 pillars, we're able to build a mix that is scalable. And so this brings us to what we call the pathway to success for entrepreneurs. We recommend monthly financial reviews to help you understand what happened in the month previously. So that way you can continue doing what's working, make changes to what didn't. That flows directly into our tax team. We share that information with our tax team so they can sit with our clients and help them plan for tax requirements, tax compliance going forward, as opposed to having this done after the fact. Compliance is something that should just be done as a byproduct. It shouldn't be the product that is sold. And so we work with our clients regularly to help them understand what their liability is going to be and help them plan for those payments. And this is all summarized and with a foundation of having actionable data where and when they need it with the right team. So that about does it for us, Larry. All of this information is available on our website and summarized in an ebook that we have for rewriting the rules. If you'd like to check it out, we encourage you to. It's free to download on our website, proseer.co/rules-ebook. And that's a QR code that takes you directly to the website to be able to download it directly. If you have any questions about this, reach out to us on our website or through LinkedIn. We'd love to talk about this. We're very passionate about this topic, and we look forward to hearing from you. Larry, any final words?
No, I think that you did a great job, Jeff. So thanks for hosting this first one for us.
Thanks.
And I look forward to chatting with any of you who'd like help or just want to talk about accounting, process, and technology.
Awesome. Well, thanks everybody. We're here to help, and we look forward to talking to you soon.